Good evening, guys. Ken at Tortoise Capital, weekend strategy podcast for Friday night, January 7th, 2022. Let's go and see what we got. So today, we were prepared to react to yesterday's critical state around 468, and we were prepared to go in either direction. So today, there was a legit move. When it broke out of that box to the downside, there was a little bit of a recovery. So there were some tradable moments today, but we didn't really see the big breakdown that we had been prepared for. So we're going to see guys made some pretty nice moves today in in their tactical trades. My overall assessment is that we made a new 10-day low today. We are we closed below the Bollinger Band mean. The move to Z2, or I'm sorry, to Z1 is certainly there going into next week. We had a PSAR flip today. So the PSAR flipped from here and moved up to here. So now the orientation is definitely down. The Hull 3-period moving average is pointing the way down. The shortest term momentum that we track. The PSAR extension had been pointing up, but now when it flips is basically flat, and the RL30 extension is basically coming into the 12 o'clock position. So this is legitimately a turning point in the market, right? And the downside is to be prepared for more than ever. So lots of work to do this weekend to prepare for potentially a new regime. What I want to look at real quick is making these connections between the lowest low of the RL10 and just extending that. So if we take that generally as the upward channels limits, so this thicker red line would be connecting the upper humps. Yeah, you can see now that what we've got is a significant warning of this breakdown through the channel. Now, we've had this one before, and the response to that was a very strong buying pressure, right? So we're mindful that that can happen. We know that can happen. It happened here. It also happened here. So sometimes these little channel breakdowns act as a almost like a washout to see where the weak hands are. Can they be shaken out of their positions? What makes these a little bit different, I would say, is that here the PSAR flip happens before the move occurs, right? Whereas here, this move down could be seen as an aberration because the price quickly corrected and got back into the channel, and so you notice that the PSAR never flipped. Part of that was the price had sold off so sharply. That was because of a dividend getting paid, by the way. That sold off so sharply that the RL10, which is here, didn't have time to breach the PSAR by the time price had resumed and moved up. So you never saw the PSAR break by the RL10. But this time, the RL10 drifts down, breaks the PSAR, and then that's why the PSAR flips. So the fact that this is like the third wave, this is the third wave of selling, now makes it a little easier to get the PSAR reversal. Okay. So critical state, even though we're in an aging bull, I am directionally neutral, and I'm ready for this to not only be a good critical state for day trading, but also for swing trading. And so now the next, the swing trade frame that I'm looking at would be something like a swing that would take it back to 449 down to the previous 30-day low. So I'm looking for that kind of a move to the downside as legitimate for the swings. Now, if it does get to 449 and breaks, then I'm looking to get a much larger swing position, because then that will have negated all of this upward channel. That gets negated by price breaking below this 30-day support. So we're going to remember 449 as a really crucial price level when we start looking at some of the longer term charts when we look at the weekend report. Okay. Excuse me. And why does swing trade matter? From a message you saw earlier this week, Bill, my drum partner, my sensei, gave me his annual coaching update where we're reviewing all of his production systems, and most of these are swing trade patterns. And so his annual report to me looks something like this. So he's got he uses a hybrid blended monthly rebalancing that has a 3.25 system quality number and has returned 13% for 2021. He's got a Bitcoin and Ethereum PSAR flip system that is a swing trade, which is the one that he briefed at the research weekend, which netted him 27% this year on swing trades. He does a hybrid BMR. That's a alternate version of this one that also comes in above 3, that did 12%. He uses a modified BMR system from the year 2016, which brought in 22%. It has a slightly more volatile history, and so there's the extra volatility makes the system quality number a little lower, but that's kind of offset by the fact that it earned him 22%. He's using a BMR system with some leverage funds, which again, the extra volatility drops the SQN, but has a pretty good performance still, 12. He has one of his retirement accounts for his wife, has a limited range of funds that can be used. And that one brought in 5%. The fund switching within their monthly TIA CREF account, there's much fewer choices in there, but still gave 7%. And then he's been using that same PSAR flip swing system that he built for the Bitcoin Trust and Ethereum Trust, now using it on selected altcoins, which has a ton of volatility, but that volatility is to the upside for him, and that netted him 156% for the year. All of these are swing trades. So while most of the work that we've been doing here in the foundations course and the nightly coaching is working on the patterns and getting a lot of stick time or a lot of practice time, a lot of reps, it's important to remember that these are fractal patterns and that the interpretation of the charts is identical regardless of the time frame. That just tells you how much time in between decisions there are to be made. So it's important to study the patterns for what they are and find the ones that resonate with you, and then to put them into the time frame that makes the most sense for your time availability and your risk appetite and your personal objectives. Bill's running a consulting business, does a lot of traveling, and so swing trading is an ideal fit for what it is that he wants to do, and he's learned to adapt these systems to that end. So I wanted to share that with you. Don't neglect the swing trade. All right, let's look at the sector performance today. All right, the S&P was in the middle of the performers today, down 0.4%. Treasuries were off 0.72, so still closed above 140, but did not really act as a defensive play today. Tech and the Russell were both off a little over 1%, so the speculative U.S. indexes were the big losers today. The conservative U.S. index, the Dow 30, was basically flat at 0.02. And then the big, performance of the day was in the emerging markets. EEM was up, which was up 0.9. Sectors that were better than the S&P today, oil, wheat and precious metals, materials, and lithium, all between minus 0.39 and 0.7. You had oil exploration, 0.08. Consumer staples, 0.1. Blended commodities, 0.2. Lumber, 0.5. Mexico, the other lumber, and then agriculture up between 0.6 and 0.86. Finance and energy continuing to outperform the S&P, and we talked about that one yesterday, and we're framing it for continuation patterns today, and that's exactly what we saw. So they were up 1.2 and 1.37 respectively. Brazil 1.8, marijuana 2.4, and then individual companies that did very well. We're going to see an amazing 18-hour trade from Joe today on Alcoa. Virgin Galactic up 5.7, U.S. Steel 2.5, Robinhood 2%, Devon Energy 1.08. Getting pulled along by the energy sector. John Deere continues its outperformance at 0.6. It's had a nice, quiet little 20% gain since the time when it was down around 320. They make good American tractors. Cliff Natural Resources on the fractional gains today of 0.17, and Apple just above zero, along with Microsoft. So actually did better than their tech, the broad tech sector. So that feels to me like their little sell-off is over, and people are starting to regenerate their positions there in the tech leaders. Underperforming sectors, the FANGs minus 0.6, tech, blockchain, clean energy down between 0.9 and 1.1. Simon Property Group in our commercial real estate proxy, down 1.16. The two ARCs, innovation and genomics, down 1.4. Moonshots portfolio 1.6, consumer discretionary 1.67, S&P Bio 2.1, the blended large cap crypto minus 2.7, VIX 2.9, which is kind of odd on a day where there's weakness. I was expecting to see more gains in VIX given the relatively weak closing of this week and the weakness of the whole week. I'm surprised to see that the VIX was not being aggressively bought today to protect against that. So that reminds us that that this little pullback still is a buy on dip opportunity in traditional lens. So we got to be mindful of the upside, although we will respect the potential of the downside. Bitcoin futures minus 3%. And then the Bitcoin Trust and Ethereum off significantly again. Individual company performance, Tesla off 3.5. So the entire 13% boost that it got from the amazing business performance results has all evaporated and is now back to testing the 1,000. So Tesla right now has gone from the early believers in the dilettantes to now having to compete on the basis of business operations in the trading market. So to me, it's a trading vehicle now, and not so much just a true belief in the power of the future. It's gotten so large and requires so much money for it to continue to gain that I think it's now a trading target as opposed to a buy and forget kind of a position, right? Having said that, it's still an excellent candidate for swing trades. Squarespace and PayPal, the financial disruptors, both off large today, 2.2 and 2.4. Coinbase, the other disruptor we looked at, was only off 0.7. So going into the week ahead, to me, this is still a market being dominated by finance and energy in the local, U.S. markets. And then I'm open to the possibility of the emerging markets and Brazil continuing to make some gains while the U.S. sorts through its pain and suffering right now. So I will be ready for tactical trades, emerging markets in Brazil, if they should continue to work. I also am going to continue to focus on the metals. I mean, they've had a couple really good days this week, and this was a good day overall for the metals, while it was bad for the broader U.S. market. So energy and finance. And then within XLB, it's kind of strictly the metals. Excuse me. Pardon me. All right, let me know in chat if you found that to be helpful. Let me jump straight to the weekend reports, and then we'll come back and check the trade cases. All right, so we are still in bullish normal. We're seeing weakness now from the 90 days all the way back through the 2-day cycles, especially the 10-day. That's really the swing trade priority time frame for us, and that's the one that is showing the most divergence from the longer term. So that's telling us that we have a real critical state here, and we got to be ready for either a rebound back to overbought or a collapse through the bottom, as we kind of laid out in great detail yesterday. The risk Z is still reminding us that the upside move is still there. So this little breakdown out of that rising channel could certainly reverse now and go back to the top of the channel. That would be the least surprising move. The one that pays off the most, the one that hurts the most people, and therefore the one that's most interesting, would be that collapse back down to 449. And we're already seeing that happening here in the risk Z. So a move to the downside, a move to 449, would be accompanied with sharply rising volatility and would produce exactly this kind of move through the fall, which would take it down to the zero line, and then continuing possibly into the winter below the zero line. And so that's what this indicator does for us, is it helps us mark the turning of the seasons. And so there were some good swing trades available when winter became spring, but now summer has fully manifested at Z2, which is, the northernmost upside move that you could reasonably expect. And then, so now the downside move is the one that concerns me. And I see that really in two legs. The first one in the fall down to the zero line, and then the continuation possibly all the way to -2 sigma on the risk Z. So that's why this feels like a really important turning point for us. Real estate is continuing to do well in the blended monthly rebalancing, as is materials. Energy has now come online. Now that one is, energy and finance tend to be tricky in the BMR because those moves often are very strong for 2 to 3 weeks at a time, but it's kind of hard for them to generate multiple months of extended outperformance, whereas real estate as a separate asset class can certainly do that. So I look at the current leaders to say, what are some interesting short-term targets that are available for swing trading, not just for blended monthly rebalancing, but I also use this report to help me find some things of interest. So like semiconductors are certainly in play right now. In ETF2, the generally weakness in the market this whole week globally ends up reducing the theoretical exposure from 40% to 30%. So it got just a little riskier in the broad markets this week. Monthly market check, it's kind of stalling at the top, just short of Z2. And so for me, what we were worried about was that move down to like 449. On the monthly chart, that would simply be getting back into the dragon. On the monthly basis, that downside level of concern would be 415. Now, unless you're a really long-term holder and you had basically made your entry when it PSAR flipped here, if you're that guy and making monthly moves, then maybe you can afford to have a stop here at call that 415. But to me, on the monthly, there's no way I'm going to let it get below the 2-bar low, which is 450. That's kind of the line in the sand. So for me, this is a tactical move down to 450. And then if that breaks, as we said earlier, then you will start seeing a bunch of capital preservation moves from the longer term holders. And those are going to be guys that do not want to let it get below that quarterly low. Let's call that 430, which tells you that's the size of that next move if it breaks below 450, and that would be a move down to 430. And then, the final, what we would call in the Army, the final protective fire, the final line in the sand would be 410. And if that breaks, that represents something like a 15% sell-off from the swing high, almost 20%. And then that would be the signal of watch out for a move all the way back to the Bollinger Band mean. That's the kind of price collapse we saw during the COVID. And so that's a low probability, but it's a non-zero probability. So those are the price levels that alert me on the monthly chart. Looking at the 9-day, again, I think I'm not interested in letting it get below 460 if I'm on that chart. And certainly the PSAR flip at 449 is that next target. So I see that as our reasonable swing target to the short side tradable range, and that's from, call it 467 to 450. So you're talking about, $18 worth of potential move. That's about a 5% kind of a move that's reasonably available on the swing. The weekly, you can see how that just blew right through the last week's low, and then followed by this collapse that has almost made it through the weekly dragon. And that's where you got to, again, draw the bottom line about 463. And then here's our key price level of 449 is a return to the Bollinger Band mean on the weekly basis. And again, that's the least surprising move. And it's the same kind of move that we saw here that got back to the Bollinger Band mean and almost here. Now, in both cases, that held support, and then the longer term bull found the strength to keep going. But the more times it pulls back to the Bollinger Band mean, the harder and harder it gets to believe in it. What you want is something like this period where it doesn't even get through the dragon. And so when it gets through the dragon on the weekly basis, that's really where you got to be concerned about those kinds of moves. So now as we look at this, we see why 463 is important, that it's threatening to get through the weekly dragon. That's why this was kind of an anomaly move. It got through the dragon and then sharply reversed. So we're ready to believe in it if it goes back up, but we also got to be ready for that other direction. And that's why I call this a perfect critical state for the swing traders as well as the day traders now. 3-day, yeah, you can see it clearly rolling over. Here's where it got back to the Bollinger Band mean a couple times. In both cases, there were rebounds. So again, we're ready to break out in either direction. And here's what 450 looks like, 449. That's really a return to the 3-day chart fair value. And then if that breaks, again, we said 430 was the next downside target, which coincides with Z2 on the 3-day. Quick review through the BMR portfolios, ETF 13, the leading candidates, the S&P, real estate, and tech. Significant pullbacks on the leading candidates this week. Nothing much else to choose from this week. I mean, there was broad-based selling in everything except for the absolutely horrible and not very good Latin America. And then we'll see also later Brazil when we look at ETF 32, right? So this is simply a fire sale for tactical purposes only. I'm ready to trade that tactically next week. It's not a position that you can afford to have as a long-term position. But the leading candidates are still the leading candidates. This is why we have a 10% trailing stop from the highest high to give it room to recover and to regain the strength that it has shown before. But it's on the clock. It's got to make that move. Now, this is why I'm liking energy as a short-term tactical trade. When it gets these little 2 and 3 week moves, you can get some very significant outperformance over that time frame. And when you get it, make bank on it. Don't fall into the trap that because it's been good for 2 weeks, that's going to lead to 2 years of outperformance. Recognize it for what it is, and that's an opportunity to get abnormal returns over a 2 to 3 week time frame. And then you'll notice his other running buddy that we've been highlighting this week, finance, continuing to outperform. Those are the 2 bright spots, and that's why I'm really concentrating on them for the intraday and short-term swing trade. Let me know if that was helpful. So here in ETF 32, here's energy. There's finance with its outperformance again. And when energy does really well, oil exploration usually has some opportunities in it. Here's the interesting anomaly is the clean energy is just getting smashed. And I think what that is recognizing is that some realities about just how scalable clean energy is it's not economically viable. And we've already printed all of the easy money that there is to support. So there's not a whole lot of appetite for much larger expenditures in those areas because the concern about fiscal soundness is becoming more and more apparent. And so the enthusiasm for endless cash to chase clean energy with subsidies really isn't there. And so you're seeing that just getting smoked across the board with no end in sight. So I think there's more downside available there. So you couldn't see a bigger contrast within a single sector, clean energy versus oil exploration. I mean, look at it. That's the difference between plus 9% and minus 7%. That ought to tell you where the smart money is looking about the viability of long-term clean energy. In the Dow, Chevron is responding to that burst in the energy. Caterpillar in the industrials, recovering its mojo. American Express in finance looks like the winner there in the finance sector. Where else do we want to look at? I think this is an opportunity and wait. I mean, that's the equivalent of the risk-free rate of return is Microsoft and Apple. So the 6% sell-off to me looks like opportunities. And it'll look that way to fund managers who have to own large cap tech that can be trusted in troubled times. So those two, I think, are both offering opportunities, as is Home Depot. I just think that you got to, when you get a chance to buy great American companies like that on sale that have long-term positive cash flow, you got to be stalking that just like a fund manager would. The spike in semiconductors had a sharp reversal this week, but conversely, NVIDIA had a pretty good week. So we want to keep stalking NVIDIA as an opportunity. Energy and banking. More energies. Energy and banks. That's where the strength is at every echelon of large, medium, and small caps. In the ETF2 report, so we've got only 3 indexes in the big market model that are on a buy position, and that would be Europe, the S&P 500, so it's large caps, and the U.S. mid caps. The fact that only 3 of them are on a buy is why we're at 30% and 70% in the theoretical model. We're in bullish normal conditions. The S&P is better than the global. So for that one, we're looking at the strength column. And the US is at 73 and Euro-Asia is at 56 in the yellow. So there's still a qualitative difference of improvement in the US large caps versus the rest of the world. You can see now that inside the US indexes on this model, that the S&P is the strength at 73. It's better than tech at 70, which is better than mid caps at 65. And those are all above the database average because they're in the white. The only US index that's below that, that's below the average, is the Russell. So the speculative Russell is the weakest member at 47. The 2 strongest sectors in the world model, S&P and tech. And then the 2 weakest remain Latin America and Asia, less Japan. Again, looking at the strength model here, you can see, let's see, energy and financials still doing pretty well. Tech and discretionary doing pretty well. Treasuries are lagging in the broad asset classes, as is gold. The blended commodities and real estate are above average. And this is where the strength in real estate looks to me to have some legs. That, as you know, tech has cooled a little bit here. The Russell has cooled a little bit, seeing some pullback in all the equities in the US. There's no love overseas. So the rise in the strength of real estate is sort of the alternate asset class where some of that, those abnormal gains from the equities from this year are rolling into real estate as a persistent long-term store of value. So I still think there's legs in real estate. You can see basically the strength in the US here, all of the big indexes above average, except the small caps. That's where the weakness in the Russell is causing it to decay a little bit. Latin American emerging markets, relatively weak. Brazil, especially bad. The resource effective in Canada makes it above average. Inside the ETF2, quick look, consumer staples looking better. Obviously, energy crushing it on both strength and consistency. So now we're looking at the strength and consistency portion of this model. And those that are green and green, like energy, that's this. It was great and is still great, and the winners are continuing to win, so you stay with those. The ones that are green and white, they used to be above average, and now they are among the leaders. So these represent potential new leaders going forward, and we want to be ready to exploit new strengths. So consumer staples, the financials in the form of the banks, materials are showing some potential, et cetera. To look at the tradables, we were looking at this column. Excuse me. The ATR percentage. So these are the top 30 most liquid ETFs based on average daily dollar volume over the last 30 days. Okay. And we compute ATR percentage by taking the ATR divided by price in order to get a comparable degree of volatility to compare. Those that are green highlighted have relatively high volatility to compare to all the other ETFs in the database, about 300 of them. And these are ones where their volatility is more than the database average plus one standard deviation. So when you add together lots of liquidity and lots of volatility, you have great targets for shorter term trading. And so energy, semis, biotech, regional banks, and oil and gas exploration make these excellent candidates for shorter term trading, either intraday or short term swings. Those are the top 100. I'll let you look at those. Shifting to the daily, we've already seen this. We'll go to dashboard 1. Again, bearish normal or bullish normal, excuse me, bullish. So a slight stability in the last 2 days, but the 10-day sell-off is troublesome, making it still oversold. We're seeing signals in overreaction and in channeling in the U.S. indexes. The min pain ones are being dominated by energy companies and old reliables like Johnson & Johnson. And we're seeing some weakness in the max pains in tech, Microsoft, some NVIDIA, Tesla, and Adobe. More auto framers now available as that sell-off, that slide continues. That starts letting you see auto framer candidates. So Microsoft, which is a channeling and 4.3 to 1, must be on your radar for this week ahead. It's a must frame. United Health as well at 4.7 to 1. In the ETFs, only diamonds were on a doji. I'm sorry, and industrials. Plenty of auto framers now to choose from. There's healthcare at 7 to 1, as well as being a channeling and an overreaction long. I like tech at 3 to 1. And materials are showing some possibilities here because of the strength in metals. That's one that could have some legs. If you just take a quick look at the strength in energy and finance, you can see in this region over here, just how much outperformance they've had against the peer groups in all of these different time frames. They are really standing out, whereas clean energy, by contrast, is just getting smashed. So that's why you pay attention to the sectors on the swing trades, because of the difference in performance. I mean, over the 1 month period, clean energy is down 18%, but energy, the sector, is up 7%. So that's a real 25% difference in performance over 22 trading days. That's how sharp these swing moves can be, which to me is why there's a real payoff in attending to that time frame. There's that seems like a good trade-off time frame between watching your monitor every day, every minute, and having a rich and full life for other things too. And that's why I opened this weekend's report with a quick look at Bill's swing trades for the year. A lot more now in the auto framer. There's the system parameters up there. Healthcare and United Health certainly get your attention at better than 5-1 and 4-1. And certainly Microsoft and treasuries. I would expect treasuries to have a nice move if we saw weakness in the S&P next week. So because the S&P is poised for some short-term losses, and treasuries are poised for a nice upside swing, I think that's got to be on your short list. Technology too, just because I'm always interested in buying it on sale. Real estate offering an opportunity on the squeeze, as are diamonds. And even the S&P is near the top of the list at 1.9. So this is not runaway volatility yet, but if this thing starts collapsing some more next week, look for that to change. Great opportunity. All right, that's everything I want to look at. I want to get to the charts. Reminder, tomorrow at 8:30, we're going to do the swing trade frame review. The first Q&A session for the foundations cycle that starts this week, and that's going to happen at 6 Central Time for all the new students enrolled in foundations course, because that's the first Q&A. All we're looking at there really is just familiarity with the courseware and the sites and places for resources, and make sure that they have all of Phil Wu's fantastic note charts. He just completed the one on the protreptic course. Amazing, unbelievable work he's done there. That thing has a real attractive price too for looking at value-centric coaching. And then Phil is starting to work next on the day trading home study course. So we'll be raising the bar on that resource sheet. He's doing great work for us, a real treasure. All right, let's look at the trade frames for some coaching. Here's some work from Mark, I think it was. He's taking a look at the at extremes in the percent R to alert him to potential turning points. And that's using an oscillator to find extreme points that show potential for turning. And you can see the logic that he's using right here, that when you get to an extremely overbought and it starts to roll over, then that's the price move that led to this move to an extreme, and then this rollover accompanied by here. So you can, there's what you really need. There's the PSAR flip, there's the trade. There's the PSAR flip, there's the trade. So those alert conditions are built into the other indicators as well. And so this doesn't make me extra believing in the fact that the turning points are there, because this is derivative of price, as are these turning points derivative of price. So a turning point is still a turning point. But I want you to notice, if you stand back and look at this from a distance, how nice and orderly that dragon is as he swims near the bottom of the river and he makes his reversal, gets to the top edge of the floodplain, and he swims from Z2 to Z2 every so often. And when that breaks out above Z2, that's that second leg. And then the reversal brings him all the way back to Bollinger Band mean. That becomes very tradable legs in this symbol. And that's the triple biotechs. And we've already seen that the biotech sector is very tradable, lots of liquidity, lots of volatility. And so that this becomes a really interesting target in XBI. This one in blank, this is an individual company that's in the electric energy. I want you to notice Z3s that get extreme and then get rejected lead to these kinds of moves. So anytime you get outside Z2 and then see that thing rolling over, if you're going to be a trader, you have to get short somewhere in that space between the 1, 2, 3 and the PSAR reversal, and then the crossing of the dragon. So you have some discretion in here. But if you're ever hoping to get those moves and pay yourself, you have to be getting in somewhere in that region, in this region here. This one is on the semis, the 3X. And again, swimming from Z2, you can make a living going from Z2 to Z2. Notice how the sell-off occurs in one leg. The recovery goes leg 1, pause, leg 2. So climbing up the steps, falling out the window. Climbing up the steps, falling out the window. That's why, to me, those collapsing dragons are my favorite target. Now look at this collapsing dragon. How much of that do you love? All of it. The fact that the last bar was a tight bar, I now start thinking that's a critical state. It's either going to reverse out of this back to the Bollinger Band mean, or there's going to be another big leg down that would be of this size. So actually 58.50 is in play going into Monday. So 3 very interesting trading targets, and he's using this as a way to identify potentials, getting a feel for their movements. I like that he's investigating other indicators that he has confidence and experience in, and now he can start deciding how much does he need to have on his dashboard. Is this adding new information, or is it confirming existing information? So there's always a personal trade-off on how many indicators you want to have on your dashboard. So this is part of making the system your own. So I encourage this kind of experimentation. Oh yeah, okay, I'm sorry, that's the same one. All right, here is, let's see, here's some work in the Aussie dollar on the 3s. Now that we're starting to get some more folks posting charts, if you'd put your name up in here, then I'll be a little more personal in my comments. I'm always interested in these rejections and reversals about things that get beyond Z2 and then start to reverse. I like a 1, 2, 3 exit after a reversal and just say, let me just try it. And let me just set that up as a risk box and see if I can't get 3. Z2 reversal, Z2 reversal. Z2 reversal. So I'm looking at those turning points in the RL30, that whole turning point cluster. This one is interesting to me right here because you have this double bottom and then a slightly higher low. And then you have a PSAR flip right here. That's your kata 2. And you will probably get paid in here. And then a re-entry in here to get paid. So there's some potential in that move. I like that you're not trading inside the chop. This one represents like a Z3 breakout. I actually think if you look at this as the Z3 pinch here, and when it gets the pinchiest and then it starts, the Bollinger Bands are expanding. When you bring this across, combined with your kata 2, you might be able to get an entry a little bit earlier, but still, that's a good entry. And I like the fact that you had given it some room and you were decided that after this little test to lock in your gains. Now, what I would say is when you see how choppy in this thing has been and it rolls over that much and you have a PSAR flip, here's where your PSAR flip sniper exit is. And this is your Bollinger Band mean managerial exit. I think this gives back a little bit too much. I'd like to see you on this kind of a move. I'd like to see you at least get out there, splitting the difference between the sniper and the Bollinger Band mean. Now, when this cracks and then it can't make a new high, and you've got the RL30 rolled over and the PSAR floating down, and it's through the Bollinger Band mean and it's leaving the river, this is where I think you can get short, or get short as it crosses the VWAP, or get short as it leaves the river and crosses the 270, rather than waiting for a complete breakdown beyond Z3, and then it starts reversing. So if this doesn't immediately fail, it should, because it's going to come down and test these levels. Because what you're really saying is leg one, it should get to here pretty fast. And then if that collapses, then it's coming all the way back over here. That's the move that you're betting on a Z3 excursion. When that doesn't happen, you can't wait this long before you get out. Only then to get short again and then let this thing come all the way down to Z3 and let that turn into a -1. Can't do that. You can't have that. I like this effort right here because you were getting the breakout above the RL10 and using a pretty tight stop. And the idea is that it should get back to here. That's the target you're looking for in leg one. And then if it gets through there, you should get a second leg up, right? The exit was maybe a little slow, maybe 1 bar earlier at the PSAR, but I love the stop and reverse. Now, if you were ever going to put a second position on, you come back to this RL10, and then when it violates, here's your collapsing dragon. Then on this one, what I want to see, when you see that 2 bars outside of the Z2, but they don't get to Z3 and reverses, you got to take that one here instead of here. I don't mind this effort. This one starting to get a little weary. Maybe you could have been here. And then on this one, if I get almost to the RL270 and then it rolls over, let's try to keep a piece. But I'm loving the extra, the stop and reverse and getting short. And this one scratches, but look, this third position at one point had this much in hand, more than an R. So if your stop on that was here or even here, you had a full R that was retraced. But remember, that -1 R that you gave back on that move is multiplied by the 3 positions you have in hand. So that's given back way too much, way too much. So having said all that, bringing home 4.3, pretty good work. That's getting paid to learn right there. So here's what 18R and Alcoa looks like. Find the mover. You will recall earlier this week, Joe's note to himself was mental toughness, emotional bank account, keep taking the shots, find the mover, and stay out of the crocodile river. Here's the gap up. There's his MMRB, locks in this, and then is strict and keeps 3/4 of the maximum favorable excursion. Sees it bottom out, finds support at the 270, 1, 2, 3 entry, crushes it. When he sees this little recovery and gets a K2, crushes it. Now he's optimizing for 2. So this little give back is -1 times 2 positions. So he gives back 2, but keeps 17. Ladies and gentlemen of the jury, Alcoa. Here's Joe and SPY. Ruthless risk management. Keep taking the next shot. Before I frame a trade, ask this question. We talked about this one earlier this week on my little rant. Is this a critical state? Is it? It should be absolutely abundantly clear. No controversy. The harder you have to work to prove that it's a critical state, it's not. It should hit you in the face like a wet fish. Is it a critical state, or is it in the crocodile river where they eat me? Beautiful. Fake 1 goes over to Z2, rolls over, PSAR flip, crosses the Bollinger Band mean, crushes it, takes a reasonable stop, just as concentrating on one position. If he was going to put a second position in, he would take a look at this reference point, draw it across here and say, look, not only is it breaking through that support level, but also the fall turned to winter. And when it confirms here, bang. And then kind of a 1, 2, 3 exit would be here. But because he's concentrating on 1, he can afford a little bit of wiggle room without crushing his hopes and dreams. And so he still brings home 2.3 and then gets a nice SSC entry. And by he used the maximum adverse excursion and then just sticks to his guns and says, that's the price that tells me the hypothesis fails. So this is just noise in that mindset. Now, because he's concentrating on trade 1 scoop and trade it well, he's now able to resist the urge for a second position there or there. If I was ever going to put a second position on, I would consider that, because I think it could come back to this price level, but it's crossing the VWAP and the 270, and it had a chance to fail, and it didn't, and it resumed. That would be the opportunity space for a second one if ever you were going to put one on. Makes a nice cash. If I would strongly consider this one, because you held support now at a higher low compared to the previous low. That makes this, when winter turns to spring, that's a Kata 2. Again, not as much room, and it's being smashed downward here by the, that looks like moving average 200. And now it's just kind of diminishing. Not much more left in Crocodile River, but it's worth taking the shots. So that's an additional 4. Running cumulative R total for the last couple, 2-3 weeks, 40. Notice that his wins and strict risk control That's what we want to see. Tattoo that on the inside of your eyelids, Joe. NVIDIA beauty in the chip space. Man, do I love this one. Oops. Z3 excursion and a turnaround, 1, 2, 3 exit, or 1, 2, 3 entry with a risk box just for the hell of it. There's your SSC. There is your emerging dragon. Found support here and had a heck of a move. Found support here, had his tradable move. There's the SSC. I think we gave back too much. We kept this much, and we gave back 3/4 of the move. So I want more out of that. Oh, collapsing dragon. So right here, you know, you have a low and a strong move. You have an orderly pullback to approximately the VWAP, and it holds and it turns to spring. So you'd get an SSC here. This is also a kata 2. So now it rolls over exactly where it rolled over before. If you were thinking about getting short here, you would take a look at this last move and say it got down to here. So you would project a move down to here as your reasonable target to the return to the VWAP. So that's a tradable moment. And what you get is this, and now it starts resuming. I would now be looking at trying to get long inside here with the idea that it will go up and test this. And then if it gets through there, then it's free and clear. But then a rejection of that price level now says, oh, I have a high, a lower high. Now this becomes the collapsing dragon, right where he's got this marked off. He didn't trade the morning move because he wanted to start with an SSC. Okay, nothing wrong with that. That's a trading plan, sticking to it. But for study purposes, there's your PSAR break. There's your Z3 pinch breakdown. There is spring turning to winter. There it is crossing the RL270 fair value. That's where it's breaking below this support level. So there's another collapsing dragon. Any or all of those are going to pay off in a huge way there. This yellow dot would be your not later than exit after that reversal. Then that makes this in context a very good SSC. It didn't give you as much follow through as you wanted, but you did get paid. And this was worth a stop and reverse. When this doesn't work, that's a great scratch. And I would have been tempted to try that one. But again, notice the power of the RL270 to clamp down on it. It really can't, it's not able to get through that. There's more downside on this thing available. So if this collapses, I want to be short around 272. And then if this collapses, 271 is really the key, because then that would be a violation of 271 as a support level. So just notice how this thing is establishing the playing field and the channels that it's creating. NVIDIA is a keeper for trading. Yeah, to my brother Bill's point, maybe he didn't take the first one because of no Z3 pinch. Uh, I'm not looking for reasons not to take trades. I'm looking for exceptional reasons to take a trade. I want to trade by exception because of exceptional conditions. All right, now here's our Z3 pinch. Orderly reversal, RL10 reverses. The winter turns to spring. There's your PSAR flip. There's crossing the Bollinger Band mean. SSC. There's your move up along the Z3, and now it's rolling over. This is a great place to exit. This is a tough place to enter. But when that rejects, this becomes the potential short. There's your PSAR flip. There's your collapsing dragon. This is an entry as it crosses the Bollinger Band mean. Not a bad entry, maybe the optimal entry here. This would be your first leg down. When it breaks through there, now you've got a collapsing dragon right here off of this one. So if you were ever going to put a second position in, that would be the place. And then you get to capture this move. That's a great exit. I like the fact that you gave it a chance to find support, saw the PSAR flip, and then took it, and then had a great exit. Now, what I want to show you is why you want standard position sizing boxes. Because of the size of the box, you get this kind of amazing move and capture 1.53. And then because of this tiny little box, you're losing 0.9. Can't have that. So if you had just decided that this was going to be your standard box, in both of those X boxes are about a reasonable stop, then you got to say, look, my execution risk box, I'm just going to be here. And now this minus 0.93, then this is not so bad. The next one, and I think you noticed this in your commentary, support level, PSAR flip. Boy, is that tempting. And now you're noticing this is the abnormally tight pinch, because see how this goes from red to yellow on his Z3? That tells you it is in a pinched condition. So now this breakdown here, trade wasn't much follow through, but it's going to be better than this one. That's where you want it right there. And now I'm actually thinking here, this is postured for Monday to break down further. Don't need a lot of comment. Here's your Z3 pinch, breakdown of the RL270. Great, superb. Now here's a Kata 2. He waits to see that higher low. Great capture, excellent shot, just not much in the river. I might, if anything, I would be looking, since you're going to the trouble of marking these off, there's your abnormal pinch that now makes this a pretty good move. That's a good shot. That's a good reason to take that. And then this one may be too late. I might like this one here at the PSAR flip and crossing the 270. There just wasn't much room in there. But okay, so just take 15 and suffer. It's more important to trade well than to earn 15. Good breakdown from the pinch. got paid a little bit. Good stop and reverse when it crosses the VWAP. Good capture. Nice re-entry. I'd like to see you at least scratch that. Great short. I think gave back too much. When it crosses the V, that's still not bad. Good short, getting paid. I'm noticing that you are capturing, or that you are quicker to get out of winning positions than cut and losing positions. This is a pretty good effort at a short. That's a pretty good effort at a long. So as long as you're keeping those losses relative, this is another one where I'm going to say, take a look at establishing your standard risk box. If you're always trading the S&P, which you are, decide what your standard risk box for execution risk is going to be so that you can start getting standard returns and rewards for these different patterns. So you get paid much more on the big moves and not get chopped around so much in here. So these won't be large R multiple losses. Like if that's 1R, but this is only 0.7R, then the adjustable risk box is killing you. You don't want that. So use a standard risk box for your standard targets. Good shot. Good second position. When you got two positions in, you cannot give back that much. Here's your 1, 2, 3 exit. Because remember, you're giving back $2 for every dollar now. And this one didn't earn that much. And you're really undercutting the active bravery was this one. And because we're being slack on here, we're disrespecting the courage it takes to get in there. Z3 pinch, bottoms out, RL10 reverses, PSAR flip. That's, that makes this a winning trade and not a losing trade. If you're going to play a channel breakout, the breakout is here when it gets past the Z3. So the channel breakout entry is here. Here's the SSC. There's the Z3 pinch breakout. And then that would make this a not losing trade. I like this one because you notice it crosses the VWAP. Maybe it's a little late getting in at the Z2, but you still got paid. That's a great 1, 2, 3 exit. Good effort on getting short. This one, I would have been really tempted. When I see a high, a low, a lower high, then this becomes the collapsing dragon. But man, I really like that one as that's the Kata 2 to the downside. Good scratch. This is a good effort to shoot. I don't think this was over trading as much as this was a chance that you're testing. It really broke down well below that chop. And then if the 270 doesn't hold, that means it's negating this whole price action and it's going to quickly run down to here. So that's the trade you're playing for. I don't think that's over trading. I might have maybe tried to get out of this on a 1, 2, 3 exit here instead of there, but that's still worth taking. And again, this is running into the problem of your risk box is so small compared to these other ones that the losses on these tight channels is killing you on your stats, and it shouldn't. So pick standard risk box. Here's getting paid in the ES. Comes down to Z3, fails to fail further, did not fail, gets the supported spring crossing, perfect 1, 2, 3 exit. And this is on the 5s, so you can't afford a full retracement. You got to get those 1, 2, 3s. I would have been really tempted to re-enter here or in here. I like that one. I love this This is where, God almighty, I want you to get short there on the pinch and a breakdown as this thing is rolling over. But to be fair, away from the computer. Oh, Mom. Z3 excursion gets reversed, crosses the dragon, PSAR flip. There's your trade. I would have tried this one and maybe that one. And this one would have scratched. This one would have probably lost a little bit. Still getting paid. That's a great shot. Here's 6R by Luke in the Aussie. Makes it easy for me to beat him up. Push that button and hurt him, right? Held support, PSAR flipped, high or low, gets the shot right as it crosses the dragon. Nice tight wrist box, gets paid, re-enters where he should, maybe gives back too much, but doesn't lose money, stops and reverses, gets paid on a 1, 2, 3 exit. Good, good, good. Waits to see some support, at least scratches, gets a good stop and reverse, gets paid. I want you out here. If this was going to fail, it should fail big. Good effort. Gave back too much. Great short. Come on, dude. Great reentry on a Kata 2 and getting paid. 6R might have been 8, but even your errors are wasting less than before. And you are self-correcting. So let's fix that. Here's what I'm seeing on this one. This was my only day off this week. So I think there was an urge to trade a lot today to take advantage of the opportunity. So I'm seeing a ton of trades in the Crocodile River getting chewed up. Then on the one that we want to get, which is the Z3 breakdown here, this one I think we could have gotten here when the RL10 goes spring, winter, and then rolls over. I think we can get short here. And then even if you take that exit, you got to be getting short again here and not here. I like that recovery. And then when it fails immediately, I'd like to see you get short here and not here. And if you're short here, I don't think you can let it come all the way back to here. And if you do, then this was fake 1, go 2. That's where you got to hit that entry. Oh, you weren't around. I like that you didn't chase it. This one is a reasonable effort on the short side, and I'm going to show you why. The big move was down. The recovery move was tradable, but the swing high was here compared to that high in the dragon. So this looks like rejecting. And now when you get short here with a tight stop, you're really looking to get 1, 2, 3, 4 scoops down to the previous test. So that's a very good short. This is a great stop and a great reverse, and you got what was available. Good scratch, good effort on the short side. There just wasn't much more follow through inside. Now we're already starting to get chewed up. So I would go back to Luke's advice there. I don't mind you with paper trading or small size to get some stick time and just get the experience on it. I look at this as opportunity trading in the dojo as opposed to production level yet. So get used to the ideas. But just got to watch the urge to trade inside Crocodile River. It's chewing you up. Now, something to notice on here. So on the previous day, You see this super pinch inside here. So that is the size of the noise box in EEM on 3 minutes. This is how, when there's absolutely no directional trading and it's just idling, that Z3 to Z3 now looks like a standard risk box that you can use as the unit of risk over here. So I actually drew that too big. So now when you enter here and your risk is there, that's pretty close to a pretty standard risk box. And now if you use that size box all day, you're not going to get these abnormal results by having, really, really tight risk boxes in choppy conditions. It gives you sort of a standard R capture for the day. So if you end up trading EEM a lot and you notice what the size of that box is, you can end up coming up with a composite tradable box based on your familiarity with how much the noise box is when it's just idling. And then that can become your standard. And then you can compare that. Now you can take this as the risk box instead of coming all the way down to the default PSAR flip. And so here's an example. If you had used the entire box like this, then this return is not so good. And then if you had been trading around in here, a 1 hour loss inside here negates all of the big capture you made simply because of the difference in the size of the risk box. So this is a good, he's starting to notice that same size risk box here, and he's ready to break out or break out. So I like this work inside here. This was very disciplined exit, great entry, great exit, great stop and reverse, great capture. And he's looking at the max favorable excursion to his exit to determine how much he's given back. He gave back about 0.6 out of 2.0. So he gave back 30%, meaning he kept 2/3 and gave back 1/3. And that feels like a reasonable amount of room to run. So I'm liking all that. All right. Good work today, guys. We'll get this published and posted. And tomorrow at 6 for the foundations, the new foundation students for Q&A, 8:30 for the swing trade frames. If you want me to talk about your charts, got to post them in the room. Then Sunday night at 8:30 will be the day trade reviews. All right. Take good care, and we shall see you tomorrow. Good work, fellas.